Hey, what is up, YouTube? I hope everyone is having an excellent day, since I know I am. I have a pot of freshly made, great value coffee, and we are ready to go. This is the last video where I go into the breakdown of my growth portfolio and the reasons why I chose how to organize it in the way that I have. In today's video, I did put together a bunch of numbers, graphs, charts, and more. So if you haven't had your coffee yet, I'd recommend to put the video on pause, hit that like and subscribe button, and come back once you've gotten your hot, steamy nectar of life.
There is nothing wrong with your television set. Do not attempt to adjust the picture.
So, welcome back, everyone. And as you can see, I have our trusty M1 dashboard pulled up. And for this video, I'm going to cover both the clean energy funds as well as the Next-Gen ETFs. You can see that I have both allocations set up for these pies sitting at 15%. The last pie, the FinTech pie, you already know that I'll be selling out of that pie in the future. It is currently set to 5%, but once I sell out of the pie, I'll then move the REIT market ETFs up to a 20% allocation. But to start, let's go over the various positions and what they're about, and then we'll go over some charts and graphs that should explain why I chose the ETFs that I have. So with that said, let's go ahead and dive into the clean energy funds. Now, looking into this pie, we can first see that I have equal weights to all of the various ETFs that I have positions in. The reason for that is because they are all more or less tied together. So to begin, let's go ahead and take a look at these ETFs and see how many companies we'll have exposure to, as well as their top holdings. First up, we have QClean, ticker symbol QCLN, which is the Clean Edge Green Energy Index Fund. This ETF is designed to track various clean energy companies that are into the manufacturing, development, distribution, and installation of clean energy technologies. For the most part, this ETF covers the total renewable energy sector from the consumer level all the way up to the industrial level. If we scroll down, we can see that they have 53 holdings, with NEO, Tesla, and Enphase as being their top holdings. Next up, we have Grid. This is the Clean Edge Smart Grid Infrastructure ETF from First Trust that tracks companies that are involved with the electric grid, meters, devices, networks, energy storage, software, and more. By having this ETF, I have exposure to 70 different holdings, with the top holdings being Eaton Corporation, ABB Limited, as well as Johnson Controls International. Ticker symbol LIT is an ETF by Globalx that tracks lithium and rechargeable battery technology. Now, they currently have 38 different holdings, with their top holdings being Albemarle Corp, as well as Gunfeng Lithium Limited. You can see that if we scroll down. The majority of these holdings, though, as we can see in the charts above, that most of their holdings are based in China, with 48.9% being Chinese-based companies. So we do have a lot of exposure to Chinese companies, which, as I explained in my last video, can have some negative consequences as far as capital gains taxes. Now, looking at Invesco's site for their solar ETF with a ticker symbol of TAN, we can see that this ETF invests in companies that are primarily in the solar energy industry. By scrolling down, we can see that they have 56 different holdings. And if we go over to portfolio, we can then see that their top holdings are in Enphase as well as Solar Edge Technologies. Moving back to M1 Finance, let's go ahead and go into our Next-Gen ETFs pie. So here we can see that I have positions in 8 different ETFs, which I'll explain why I chose these a little bit later in this video. Firstly though, I have both First Trust's Water ETF and Invesco's DB Agriculture Fund, and both of those allocations are set to 15%. This is followed by Spider's Material Select Sector Fund and Globalx's Autonomous and Electric Vehicles ETF, both of which I have set to a 13% allocation. Then I have Spider's Communication Services Select Fund and Globalx's Cybersecurity ETF, both set to be allocated of 12% of the pie. Now finally, we end with 2 more ETFs from Globalx, both their social media ETF and their video games and esports ETF. These ETFs both have an allocation of 10% each. So now that I've gone over the allocations of each ETF in this pie, let's go ahead and look further into each ETF and see how many holdings they have and what their top picks are. So once again, we are on the First Trust website, but now we are looking at their water ETF, ticker symbol FIW. From looking at their site, we can see that they chose the top 36 companies that are both in the potable water and wastewater industries. Potable water, if you're not familiar with the term, is just fresh water that you can use to drink and cook with. These holdings are chosen based around their market capitalization, which is basically the price of their stock multiplied by how many number of shares have been purchased. Their top holdings in this ETF is IDEX Laboratories and Danaher Corporation. Now we're moving on to Invesco's website, where we have our Agriculture ETF, ticker symbol DBA. This fund is designed so that we have exposure to commodity futures. Basically, as the name of the ETF implies, everything related to agriculture. Now, if we move to the portfolio tab, we can see that they primarily have futures in coffee, corn, and sugar. This ETF is a little bit different than the other ETFs, whereas because this is a commodities futures ETF, they don't have holdings per se. But as a side note, I am quite sure that my apartment accounts for at least 50% of the available coffee supply. Anyways, Here we are on the Global Advisors SPDR website looking at the Materials Select Sector SPDR Fund, ticker symbol XLB. This ETF is designed to give us exposure to companies involved in the chemical, construction materials, containers, packaging, metals and mining, as well as the paper and forest product industries. Now, scrolling down, we can see that we have 28 different holdings in this ETF. And if we scroll down some more, we can see that their top holdings in this ETF is Lind PLC, as well as Sherwin-Williams Company. Both of these companies are actually really great to invest in individually, but of course that's just my opinion, since I'm not a financial advisor or analyst. Next up, we move to Globalx's website with their ETF DRIV. This is their ETF that tracks companies that are involved in the autonomous vehicle technology, electric vehicles, and the components and materials involved in the EV industry. Out of the 76 holdings, they have Google, or Alphabet, as well as Nvidia as their top holdings. Once again, we go back to Global Advisors website, but this time we're looking at their ETF XLC. This is the Communication Services Select Sector, which aims to give us exposure to companies from telecommunication services, media, as well as entertainment. Also, they give us exposure to both interactive media as well as interactive services as well. With this ETF, we have 26 different holdings, and the top two holdings are both Facebook as well as Google. For some reason in this ETF, they've included two different Google or Alphabet stocks, both their Class A stock listing as well as their Class C stock listing. I'll have to do a little bit more research as to why they're choosing two different classes as far as Alphabet goes. But that's something that we may go ahead and talk about in the future. Moving on, we get to the Cybersecurity ETF from Globalx, ticker symbol BUG, bug. If we're going to invest in telecommunications, we definitely should make sure that those communication services are secure, right? That's actually what this ETF gives us exposure to. It has 32 different holdings, and we also have access to the top two, which is Zscaler as well as CrowdStrike. Both of those companies are cybersecurity companies, as well as all of their other holdings that they have in this ETF. Now, let's go ahead and take a look at Globalx's social media ETF, ticker symbol SOCL. Here, we're looking to have exposure to social media companies. With this ETF, we have 42 different holdings, and the top holdings are going to Facebook as well as Tencent holdings. Now, let's go ahead and talk about something fun, gaming. Globalx lets us vibe in this sector with their ETF Hero, as they are looking to invest in companies that develop or publish video games, facilitate the streaming and distribution of video gaming or esports content, own and operate within competitive esports leagues, or produce hardware used in video games and esports, including augmented reality as well as virtual reality. This ETF allows us to have positions in 39 different companies, with the top positions going to NVIDIA Corp as well as SEA Limited. Okay, so I just showed you the basic information about the various ETFs that I have in my portfolio, as well as their allocations that I've set. Now, let's go over the reasoning behind why I've set them up the way that I have. Just a fair warning, but the rest of this video might come off as being fairly pessimistic in nature. For that, I do apologize. However, the numbers don't lie. First, let's take a look at the total amount of energy consumption. I do have most of these charts divided into various countries, as you can see. From just looking at the chart, you can see that both China and the Middle East are increasing their energy consumption, while the US and Europe are actually slowing down. This can actually be attributed to a number of different things, namely heavy industry and production levels. Of course, the Middle East is nowhere near the levels that China is at, but we do see a gradual increase there in the Middle East. As far as Europe and the US goes, we are becoming more or less a services-based economy rather than an industry-based economy, since it's just far cheaper to import goods from China. There is also a consumer level aspect to this as well, but as this is a video about my portfolio and not a macro or microeconomics lecture, we won't go too far down that rabbit hole. Next is a chart that shows the production of oil around the world. The US, Russia, and believe it or not, Canada are all raising their production of oil, which in the Middle East, we can see a decline in production starting around 2018. China, however, doesn't really produce a ton of oil, but instead they do import a ton of it, as we can see in the next chart. Again, we have China with a huge increase in their fossil fuel consumption, while the rest of the world has lowered and tapered off their consumption of fossil fuels. Once again, though, this can be contributed to the amount of heavy industry and production that China is involved in. All of that production needs power, and they are currently getting that power from primarily oil and other fossil fuels. As we all know, this is the driving factor of how we are putting climate change into overdrive rather than letting the planet go through its natural cycles by an order of magnitude. So what is China, the US, Europe, and the rest of the world doing about it? The next few charts will actually show us. Since the late 1990s, Europe has been growing their wind energy capacity at a fairly consistent rate, while in 2006, China has grown theirs exponentially. Meanwhile, here in the US, we are slowly adopting wind energy, but only a third of what China has currently. Something I do want to note, though, before we continue with the charts, is the total wattage. In this chart, we are looking at gigawatts of wind energy capacity, whereas in the previous chart, we were looking at terawatts of fossil fuel consumption. A terawatt, is 1,000 gigawatts. This is something to keep in mind as we look at our other alternative energy charts. Next up is geothermal, which is using the heat from the Earth's core in order to heat water until it becomes steam, which then drives turbines. As you can see in this chart, the US dropped our capacity by almost 1,000 megawatts from 1995 to 2000, while Europe has been increasing their capacity of geothermal exponentially since 2005. Now we have hydropower generation. In a nutshell, this is using dams to create power. The US has been fairly flat with almost no increase since the 2000s, just like everyone else. However, China has increased their capacity significantly from just about 200 terawatts of hydropower in 2000 to close to 1,500 terawatts in 2020. Finally, we have solar power. In this chart, we can clearly see that since 2012, China is exponentially increasing the amount of energy that they obtain from solar, while Europe is doing the same, but not in the amount that China is. Meanwhile, we have us here in the US generating solar power at a steady rate, along with India, with the other countries just getting on the bandwagon, as it were. So this begs the question, what does all of this mean, and how does it affect us? This chart is the chart of the global annual sales of EVs, or electronic vehicles, in the top selling markets. It is obvious that the sales of EVs are growing at an alarming rate. When I say alarming, they're growing at a very fast rate. But anyways, with no hint of slowing down ever. Almost every country has incentives that they give to people that buy them. And in the 2030s to 2040s, almost every country will have outlawed the sale of gas-powered vehicles. This means that the amount of energy that will be required for vehicles will increase significantly, not to mention how many nations have plans to stop using oil as a means to produce energy. Therefore, in order to meet the needs of clean energy production, we will see a huge increase in the value of companies that are in this sector. Meanwhile, companies that are in the oil sector will decrease in value significantly. This is where the ETFs QClean come into play. Likewise, DRIV will allow us to take advantage of the total EV market and how EV companies will eventually replace gas-powered vehicle companies. Now, I know I just mentioned QClean, but here on this slide, I want to show you how all of this is put together from a consumer's point of view. Here, we have a house with solar panels. By having TAN in our portfolio, we have exposure to companies that are involved in the production of those panels. Next, we can see a Tesla Powerwall, and that Powerwall uses, you guessed it, batteries. This allows the power being generated by the solar panels to be stored for later use. The ETF that tracks batteries, LIT. Next, we go to the PV battery inverter to the meter. As these will be smart devices, GRID gives us exposure to the companies that make those devices. Now in this example, we have exposure to the solar-based system through TAN, lit, and grid. But if we want additional exposure to wind, geothermal, and hydro, we also need to include Q-Clean. Next up, I want to bring your attention to this global chart that shows the current stress levels of water per country. As we all know, humans need water in order to survive, and we also use that same water for our agriculture. We can see that already a number of countries are already running dry, no pun intended. And if we continue to use water with the same amount of consumption rate, this is what it will look like in 2040. By using the simple strategy of supply and demand, we can see that the cost of potable water will rise dramatically, maybe even to the point that it becomes a geopolitical issue with the same issues and consequences as oil has today. However, there is a chance that this won't come to pass, and that is with using nuclear-powered desalination plants. The problem we have today is twofold. First, it requires a ton of energy to power a desalination plant, which is basically a water treatment plant that treats seawater so that we can drink it and use it for agriculture. Next is the problem of the general public having way too much fear around the usage of nuclear power, to the point that it affects their regional political decisions. However, we could use miniature reactors to power the plant. I'm not going to explain the entire diagram that's shown here, but to suffice it to say, there should be like a water pipeline that brings in seawater to the plant. That seawater is then used to both cool the reactor and drive the turbines to generate electricity through steam. That steam is then collected and fed to a non-potable water tank, which is then treated by using the power that the reactor has generated. Finally, the fresh water is then sent out so that we can actually use it. So, speaking of water and agriculture, in these two charts, I am showing you the increase in global population versus the average supply of pulses, quote unquote. The right chart basically shows how much food there is per person worldwide. From the 1960s to the late 1980s, we can see that there is a huge rise in the worldwide population due to medical advances from that time, while in the same time period, the total amount of food per person has dropped. It's not exactly a one-to-one correlation, but we can see the trend starting to form. From 1990 to the early 2000s, we can see that food per person has remained fairly steady. However, during this time period, the population has fallen and then steadied out as well. From the mid-2000s to 2013, the amount of food being produced is rising due to the advances in chemistry, biology, and technology, while the population is slowly declining. However, the population is due for another large increase if the trend remains the same. By having DBA in our portfolio, this gives us exposure to the commodities market and agriculture, which we can then use to take advantage of the increasing demands that we will have worldwide. Likewise, both water and agriculture is fairly recession-proof, as everyone needs both food and water to survive. And during inflationary periods, prices of those commodities will rise as well. This does provide protection against inflation fears that we are currently seeing in the markets. We still have 5 more ETFs to go, but these will be fairly short. Here in this slide, I'm showing some pictures of the damage we have done and are still currently doing to the environment and the effects that we are currently seeing from climate change. Actions do have consequences, and this is what we are seeing now. What will we need to help offset these consequences and prevent the worst case scenario from happening? Materials, and a lot of them. This is where XLB comes into play. Again, supply and demand. As you can see in the slideshow, many places around the world will become uninhabitable, while other places will become deadly to even go outside due to air pollution caused from CO2 emissions or even the CO2 caused by fires. There is also a new condition we are seeing called heat domes, which is caused by the types of materials we've built our infrastructure from that is currently trapping heat and not allowing it to dissipate, which then makes it deadly to even go outside. As we found out last year with the pandemic, we can live with very little human contact, and we also learned that we can stay indoors. However, in order to be the social animals that we are, we turn to the internet. For this to happen, we need telecommunications, which is basically the internet nowadays, as well as the ability to secure the digital infrastructure from attacks. The ETFs XLC and BUG provide us with exposure to those markets. And if we're going to be inside, we need the ability to talk to each other as well as some form of entertainment. Both of these are handled by Globalx's ETFs, Social, SOCL, and Hero, respectively. Now, if the worst case scenario occurs and we, as a society, do nothing, well, I won't really care anymore about the stock market or my portfolio since, well, we'll be living in a Mad Max Fury Road dystopia. I am confident, though, that we can avoid this since the human race is pretty good at solving problems that affect our bottom line, which is survival. Who knows? Maybe we'll get over this particular great filter and come out the other side as a Type 1 civilization. So, here we are at the end. In the last 3 videos, we went over the 5, or technically 6, pies that I have in my growth portfolio, as well as the reasoning behind those choices. I do hope that you found the breakdown of my growth portfolio useful, and as I mentioned in the first video, I'll continue to provide updates with the performance of this one, but not as regularly as my main dividend portfolio, as there shouldn't be too much changes to this since it is fairly dialed in. If you did find the videos useful, do please like and subscribe. And if you want to be notified of any major changes that do happen with this portfolio, go ahead and click the bell icon for notifications. If you've made it this far, I greatly appreciate your time, and I'll see you again soon. Bye now.